And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story, real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
Hey, good morning and welcome to the second best day of the week. That's right, it's Thursday for the Real Investment Show as we get ready to wrap up the week already. I mean, just right around the corner. It's Friday. Everybody's getting ready for Thanksgiving already, so everybody's just kind of warming up the juices, gonna get there. So a couple things to talk about yesterday, of course. Market sold off fairly sharply yesterday, and this was following the midterm election, right? So a lot of focus on the midterm elections Monday and Tuesday. Markets had rallied for a couple of days into that midterm election. Election was over, and of course, results weren't as well as expected, and so stocks kind of took a little bit of a breather from that. But really what contributed a lot to yesterday's sell-off potentially, and we're still really kind of finding out what the consequences are going to be was, and we discussed this on yesterday's show, was this whole fallout of FTX yesterday and Binance, which was the firm that was supposed to come in and basically take over and make be an angel investor for FTX to try to get it back on its feet. Backed out of the deal. They said just simply there's too big of a hole there to fill. It's between $8 and $10 billion shortfall for FTX. So a lot of people are going to lose a lot of money. We'll talk some more about that this morning. But potentially, there were a lot of high-profile investors in FTX, which, as that basically imploded yesterday, took a lot of these big funds down. Tiger Global, we'll go through some of the lists today, BlackRock, others all kind of invested in FTX, and Sequoia yesterday wrote their entire investment down to zero. So obviously a little bit of a black eye on the balance sheet, but a part of that yesterday, that selling yesterday, and it was a little bit lighter volume than normal yesterday. So again, the move was fairly exaggerated, but it wasn't accompanied by a real high level of volume. But expected that there was probably some margin calls yesterday because of FTX, some of these big investors having to liquidate positions to cover those margin calls, potentially contributed to some of that sell-off yesterday. And again, it was kind of an orderly sell-off yesterday. It wasn't wasn't a very rapid decline. It was kind of a grinding sell-off all day as this news kind of became available. Looked like there was some selling going on for that. This morning, futures are looking to rebound here just a little bit now. Dow's up about 58 points this morning. S&P's up 11. Again, not a big push. But one of the interesting byproducts of yesterday was what happened in the bond market, because the bond market yesterday had a terrible auction. And basically, we've talked about the lack of liquidity in the bond market right now. Just basically nobody wants to buy bonds at the moment because there's not a ready buyer, being the Federal Reserve. So the primary dealer's not really wanting to buy bonds. And so the liquidity in the bond market's been drying up. And this has been one of the issues for the Treasury. They need to issue debt in order to fund the government. And right now, banks are going, don't really want to buy them. And so that's been pushing rates up. Now, interestingly, while we talk about this, rates really haven't gone anywhere, despite the fact that the Fed's been hiking rates and there's been, this run of inflation. Interest rates really haven't capped much more above 4%. We've just kind of been stuck at 4% on the 10-year Treasury. But yesterday, despite that terrible auction, bonds actually performed fairly well yesterday. And again, part of that we can attribute probably back to FTX, as basically collateral buying was going on, as margin calls, stuff was being liquidated. Some of these big investors were buying bonds to help hedge some of the risk in the portfolios. So again, that probably contributed to some of that support yesterday in the 10-year Treasury. This morning, yields again a bit lower this morning as futures are up. And the one thing that we continue to kind of watch very closely is the dollar, because really the whole problem with the market this year has been a dollar story. It's been the strength of the dollar. The dollar's been actually topping here now for the last month or so. And actually starting kind of this very nice topping process. We'll see if where the dollar kind of goes to from here, but weakness in the dollar has also been contributing to some of that support in this recent rally here. But again, dollar's really stopped rising at this point, and again, this has been one of the drags on global economic growth, particularly for corporations that have multinational businesses. About 40% of their sales come from overseas. The strong dollar obviously makes those goods more expensive, and you get less consumption because of that. So part of the margin pressure, corporate margin, corporate earnings story, corporate revenue story has been coming from the stronger dollar. We're going to keep watching this dollar very closely because, again, this dollar rally has been exceptional over the last year or so. Now, about a year and a half ago, I was having a huge debate with somebody talking about, he was like, the dollar's just going to go to zero. I'm like, no, it's not. It's going to go the other direction. And it's been just a phenomenal rally in the dollar. But again, if you take a look at a bit longer chart here, it looks to appear to have topped here. We'll see. This is going to be one of kind of the key components for next year. If we do get a weaker dollar, weaker economic growth, and you would expect that if the economy slips into a recession next year, you're going to see a weaker dollar. That's just kind of where those two go together. Now, interestingly, having said that, though, the Atlanta Fed, which is the real-time indicator of GDP, of course, they were talking about 3% GDP growth. In the third quarter, we got 2.6, so they were pretty close. They currently estimate that fourth quarter GDP will now be 4%. So a very strong growth rate in the fourth quarter. We're not really seeing that in the data outside of what we see going on in terms of employment, but they're expecting a 4% growth rate. Now, they're always kind of high at the start, but they started at 3%. They've already increased that to 4%, and we're into basically the middle of November now. So again, they're expecting a very strong growth rate for the fourth quarter. So there's certainly nothing recessionary about that right now. So as the Fed keeps hiking rates here, we're not really seeing the impact of that in terms of economic growth. So we'll see if we play a catch-up game next year. Because again, as we talked about before, Fed rate hikes take about 9 months to hit the economy. So, while there was a lot of angst about a recession the first 2 quarters this year, we're saying, no, that's not really going to be a recession. We're probably going to see stronger economic growth in third and fourth quarter. Well, that's been kind of coming true here. But next year is where all these interest rate hikes are going to hit. So will we see a recession next year, or will it be in 2024? That's going to be the question of kind of how long these things can kind of hold in place. And so, again, we're watching these things very closely, but keep a watch on the dollar because the dollar tells you a whole lot of stories. A weaker dollar should be good for risk assets. That's been one thing that's kind of been weighing on risk assets this year. A weaker dollar should also play better for bonds as well. So, again, this whole story this year has been strong dollar, weak markets. So, theoretically, if we do get a weaker dollar next year, that should bode well potentially for risk assets as well as for fixed income. So we're going to keep a close watch on that. But again, the story today, and as we talked a little bit about in this morning's daily commentary, which is on the website now, is that the market yesterday did sell off. We did violate that 20-day moving average. Now it's going to be really important that between today and tomorrow, we continue to kind of hold that 20-day moving average. That's kind of the last level of resistance here, so to speak, before we kind of start retesting these lows of September, which are also the lows that go all the way back to June of this year. So again, we're starting to flirt with some pretty important technical levels here. It hasn't been a great rally this week at all by any stretch of the imagination. But again, we're still up off the lows that we had back in September, and particularly after the last OFMC report. Certainly doing better than that, but just barely. So again, we kind of want to keep a watch on that. But we'll come back. We're going to talk some more about the FTX-Binance fallout, what happened yesterday, and then why that weighed on the markets. Got some other stuff to get into this morning as well. So stick around. More of the Real Investment Show coming up right after the break.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
The end of the year is fast approaching. What will the new year bring? Join Richard Rosso, Danny Ratliff, and Lance Roberts for our year-end economic review special event, Tuesday, November 15th. How to address higher taxes in the new year. Should you delay your retirement in 2023? What will the midterm elections mean for markets? Register now at realinvestmentadvice.com for our year-end economic review special event with Ratliff, Rosso, and Roberts. realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA Advisors to work for you managing your 401k plan. Get started right now at the website, realinvestmentadvice.com, or simply call our toll-free number, 855-RIA-PLAN, or again, simply online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
Welcome back to the show this morning. So, this whole interesting rivalry between, and you know, Brent labeled the show this morning bromance, and that's really not the case. FTX and Binance were huge rivals, and they have been in a long rivalry here for a while, trying to be kind of the king of the mountain, so to speak. And, you know, as is always the case, generally only one survives, and it's kind of like Thunderdome, right? So, you know, and in this case, it's going to be Binance that survives. And yesterday, we discussed a little bit about Sam Bankman-Fried, who is the CEO of FTX and was worth about $16 billion on Monday, probably now has a negative net worth as this is going to unfold very poorly. Apparently, there's about an 8 to 10, and again, numbers kind of vary here, so you know, don't take a quote from this, but roughly there's a hole there of between $8 and $10 billion that investors are going to be out a lot of money. People that have money invested in FTX are going to lose a lot of money. So, you know, those that were smart enough to get out, they got out with some of their money, but there's going to be a lot of people that wind up losing some, most, or all of their money as well. And this is one of the problems with investing in these, you know, kind of unproven businesses and, you know, things that become problematic. And there's a real story here, and we'll find out because, you know, as we talk, you know, and more through this, and again, these headlines are going to unfold now for quite some time, but there's now going to be investigations into FTX by legal authorities, and if this was, as it appears to have been, a potential Ponzi scheme by the way that it works, and again, I'm not saying it was a Ponzi scheme, right, but the way that it was operated was very similar to a Ponzi scheme. And you know, there's going to be a real risk here for Sam Bankman-Fried that he may go from billionaire to jailmate at some point. You know, we'll see what happens. But this obviously isn't good for a couple of things. One, it's not good for the industry as a whole, and you know, secondly, this isn't the thing that, helps promote an idea. And again, these type of things, when they occur, one of the whole premises of the whole cryptocurrency environment was it was going to be, unregulated. The authorities can't have anything to do with it. And it's going to, it's freedom from authority and regulation. Well, the problem is that when you have freedom from authority and regulation, these things type of happen. And this is where regulators, as is always the case, step in and start regulating the industry. So if your whole goal was to keep regulators out of your industry, this is not the way to do it, because when people start losing a lot of money, this is when regulators go, yep, we need to regulate that. We need to control that. We need to make sure there's legal framework around it, et cetera. This is this is why you have the SEC, right? The Securities Exchange Commission. It didn't exist until after the 1929 crash, right? The stock market was this free, kind of unfettered Wild West prior to 1929. Banks were, loaning money so that they could issue, IPOs, and they would loan money to customers to buy the IPOs that they were issuing. And it was all just kind of one hand in the same pot, right? And everything was fine and dandy as long as everything was going up. But then when the crash came, this is when the government said, yeah, probably need to regulate that. And that's when we passed the Securities and Exchange Act in, the 1930s. And then have continued to apply more regulation to the industry ever since. And again, we keep having to add new regulation. Why? Because somebody figures out a way to do something. Bernie Madoff, that's a good example. And, we wind up with new regulations. Enron wound up with Sarbanes-Oxley. So, we keep winding up. We have to keep passing new regulation to try to keep bad actors from doing things. And I'm not saying that Sam Bankman-Fried is a bad actor. I'm not saying that at all. Things went horribly wrong with the business model. You're creating a box, you're putting a token in the box, and you're taking the token out of the box and loaning it to something else. And, you create this whole circular loop based on, the same asset. And that eventually blows up. And it blew up spectacularly in this case. So the problem is that eventually this is going to come in and start to create a more regulated environment for cryptocurrency. But the problem here is twofold. One, the current sell-off in cryptocurrencies, Bitcoin fell almost $4,000 just in a couple of days here, went from 20,000 to 16,000. Bitcoin will probably find the bottom here in the next, couple of days once this shakes out. Ethereum and other cryptocurrencies also down sharply over the last few days. And these cryptocurrencies have just been a tough investment this year, right? They've gone nowhere this year. They kind of move up and down a little bit, but they really have not gone anywhere. And I guess, and part of the way that's a good thing, right? They haven't gone anywhere in the last few months. So they're not going down, except for the last day or so. But, this has been a real tough road for retail investors, right? And, in 2020, 2021, we talked about this whole idea of the retail investor, and, they had the tiger by the tail. And we warned then that, be careful thinking that you got the tiger by the tail, because the tiger, being Wall Street, by the way, Wall Street tends to get even. They figure the game out pretty quick. You may have Wall Street by the tail for the moment, but they tend to turn around and bite you back. And that's the way it was back in 2020, 2021, because these retail investors were, killing it, right? The IPOs and SPACs and, chasing meme stocks and, causing all kinds of ruckus in the markets, with the Robinhood app. And we talked about that here on the show. And we said, look, this always ends badly. And it has. Unfortunately, for a lot of retail investors, they had bought into a lot of cryptocurrency just last week. We had seen a big inflow into cryptocurrency just last week going into the midterms. Bought right into the crash. But this is following the crash in meme stocks, the crash in IPOs, the crash in SPACs. I mean, it's just been It's just been a devastating year for these more speculative assets. That's the way markets work, though. And this is the important part about, risk management. There's nothing wrong with investing in these things, right? Just control how much you put into them and be willing to suffer the consequences, but in an amount that it doesn't really change your lifestyle much if things don't work. And in a lot of cases, crypto hasn't worked, but in a lot of cases, a lot of these younger investors had the majority of their net worth in this idea that was to be cryptocurrency and this DeFi issue. And look, and again, I'm not criticizing cryptocurrency at all. I think there's an interesting benefit to this. It's going to be vastly different in the future. It's going to be regulated. It's going to be government controlled at some point, just because of things like what happened with FTX. This is what, again, as I said, this is what's going to drive that regulation. And we've been saying that for a while, is that eventually this is going to end up, it's going to be deemed a security. It's going to have to follow securities laws in order to protect investors. So this whole idea of it being this rogue currency that's outside of the confines of government control, that was a nice fantasy, but that's not going to be the way that it ends up, because of things like FTX. And you'll be able to point back to this event and say, yeah, that was one of the reasons why we are where we are now. But this is going to be a few years down the road by the time we get there. But when we get there, we can look back and say, yeah, here was a series of events that caused that. But again, there's a lot of good benefit in the idea of blockchain. We talked about yesterday. Look, we got all these problems with the election. Go to the 2020 election. There was lots of accusations about miscounting of votes and ballots and all these type of things. And then just in the recent midterms, polling stations ran out of paper, and some machines didn't work, and this and that and the other thing, and there's just all these problems. And there's a lot of people they'll identify a problem and say Bitcoin solves that. Well, blockchain solves that voting problem. Somebody's just got to develop it. So there's a lot of really great benefits that will come out of blockchain eventually. And we're finally starting to see, some businesses beginning to operate on trying to figure out a way to make blockchain work. JP Morgan just recently executed a trade over blockchain, kind of the first test. And again, the whole benefit of blockchain is that the blockchain verifies the transaction. So where it starts, where it ends, and there's complete verification. You can eliminate a lot of middlemen out of the transaction. We talked about that yesterday. So, again, there's going to be a lot of great benefits, but we've got to go through this. This is the Wild West part of that asset and that technology. And very much like 1920 to 1929, which is the Wild West of the stock market, that eventually blew up and people lost a ton of money, and they didn't have, this is why we now have FDIC insurance, because banks failed, right? Now we have FDIC insurance issued by what? The government. So, as these events occur, see, when things go up, nobody cares. As long as people are making money, nobody cares. But these events, like the 1929 stock market crash, Enron, Bernie Madoff, all these type of things. This is what leads to more and more government overreach, government regulation. Why? Because you can't control yourselves. This is the problem. Be right back after the break.
Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
The end of the year is fast approaching. What will the new year bring? Join Richard Rosso, Danny Ratliff, and Lance Roberts for our year-end economic review special event, Tuesday, November 15th. How to address higher taxes in the new year. Should you delay your retirement in 2023? What will the midterm elections mean for markets? Register now at realinvestmentadvice.com for our year-end economic review special event with Ratliff, Rosso, and Roberts. realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
31% of Americans get their misinformation on Facebook. Information, I should say.
Freudian slip.
Yeah. YouTube's number 2, Twitter number 3, followed by Instagram, TikTok, Reddit, Snapchat, and LinkedIn. But everything on the internet is true.
The Real Investment Show podcast. Same show, your schedule.
But of course,
It's kind of scary.
yeah.
At realinvestmentadvice.com.
And you wonder why, ...
Anyone can sell you insurance, and they'll gladly take your premium dollars. The RIA Insurance Agency can provide you with insurance solutions tailor-made for your needs and lifestyle. Because everyone's assets are different, let RIA Insurance review what you need to protect and how. We won't sell you insurance, but what you need will be a matter of policy. RIA Insurance Agency. 888-915-0780. 888-915-0780. RealInvestmentAdvice.com. Click on the insurance tab.
Real Investment Show podcasts are now available from Stitcher Smart Radio at Stitcher.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA Advisors to work for you managing your 401k plan. It's a quick and easy application. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The end of the year is fast approaching. What will the new year bring? Join Richard Rosso, Danny Ratliff, and Lance Roberts for our year-end economic review special event, Tuesday, November 15th. How to address higher taxes in the new year. What will the midterm elections mean for markets? Register now at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show. So, just before the break, talking a little bit about this whole Binance, FTX kind of bailout. That's not going to happen right now. What was interesting is it's not just retail investors taking this hit on the chin, as I was talking about. It's, this has sucked a lot of people into it as well, because, the whole thing was like, oh, yeah, I got to get involved in this. This is great. And then, once there's a person of notoriety, everybody wants to kind of hang out with that guy. And Sam Bankman-Fried was that guy. And, Tiger Global was one of the larger investors in FTX. And as I said yesterday, some of that selling yesterday was potentially due to liquidations occurring to meet margin calls, et cetera. And again, we don't know all the facts for sure yet. This is still sorting itself out. But when you have a fund like Tiger Global and the size of that fund, then when you start getting margin calls, that leads to selling of other assets to cover those margins, right? But it wasn't just Tiger Global. There's, and two, this brings up the fact that, we've talked about before with people responsible for other people's money, what type of due diligence are these people doing before they invest capitals of others? Here's a list of some of the biggest investors in FTX, not including people like Gisele Bündchen and Tom Brady, who were also investors into FTX. BlackRock, here's an interesting one, the Ontario Pension Fund. Now, here's a pension fund investing in FTX. You're investing other people's retirement into a speculative asset. But we're seeing a lot of this, right, with pension funds, CalPERS, others investing in private equity and all kinds of other stuff that is likely not going to work out well. And again, this is why pension funds, though, are reaching for return, because they are underfunded. And they've got these fund withdrawals they've got to meet, but they keep investing in speculative assets that keep generating negative rates of return instead of that 7% annualized rate of return that they count on to meet their funding obligations. Sequoia Investments, they just wrote down their entire $200 million investment to zero. That's going to leave a mark. Paradigm, Tiger Global, SoftBank, Circle, Ribbit, Alan Howard, Multicoin, Van Eck, others. These are all big funds, right? Lots of money that have just took an investment that is not going to work out at all. So it's interesting to me that these are supposed to be some of the smartest people on the planet, and yet they really didn't do a whole lot of due diligence to understand exactly what they were investing in, which even Sam Bankman-Fried himself in an interview discussed the fact that it was basically a Ponzi scheme because of how you create a box, you put a token in the box, then you borrow the token out of the box and create this process. So we'll see. All right. Other big numbers out today. This morning, the market's either going to move up a lot or down a lot. And that's all going to be based on the 7:30 announcement of CPI. CPI right now is expected to come in at 0.5%. That is the expectation. And again, if the number comes in cooler than that, which there's a possibility, we've seen weaker used car prices. We've seen some weaker core goods prices. We've seen a lot of retailers discounting items to get the excess inventory sold off. So there's a potential that, and then also too, we've seen rental rates be starting to come down. Now it's a little bit early for those to start cycling into the homeowner's equivalent rent measure, but we may see a little bit of that show up possibly. So there's a potential that we could see inflation come in weaker than expected, maybe 0.3. But if it comes in 0.5, 0.6, 0.7, this market's going to be down pretty sharply. Another 2% down day wouldn't be surprising. But again, if it comes in weaker than expected, a 2% update won't be surprising. Again, we're so keyed to these inflation reports now. It's like, oh my gosh, what's the Fed going to do? Well, the Fed's pretty much already said what they're going to do. They're going to keep hiking rates. But we keep playing this game with the markets anyway, as like we just float from one employment number to one inflation number, trying to figure out what the Fed's going to do. And the Fed keeps telling you the same thing. We're going to hike rates until there's no inflation. Until we break, the Fed's basically saying we're going to hike rates until we break something and kill inflation. So that's the story, right? But every time we have one of these reports, we're trying to guess what they're going to say next. And so market's going to move. But this morning at 7:30, we'll get the CPI report out. As I said, right now, the expectations are for a 0.5% increase. Now, remember, we're now comparing, now that the inflation rate is going to come down, because we're now comparing a 0.5% increase to a 0.8, 0.9% last year. So inflation is going to come down. The annualized rate of inflation will come down. The inflation goes up every month, right? 0.1, 0.2, 0.0. But it's the comparison. And I had this question on Twitter this morning. Well, the guy said, well, I thought inflation was supposed to come down. Well, it is. Inflation is coming down. slowly, but it is coming down. But it's because we're comparing the current rate of inflation increase, the 0.2, 0.3, 0.5, whatever, to a 0.8. And over the course of the next several months, we're going to be comparing these monthly inflation rates to 0.8, 0.9, 1, 1.2 percentage increases from last year. So the inflation rate will come down. It's just a function of how quickly, as we see the other inflationary components begin to either, resolve themselves somewhat, start to come down, see rental rates come down. Again, the biggest component of CPI by far and away is homeowners equivalent rent. Now that's going to come down, but again, that may not be for another couple of months before we see that actually start to come through. But that's going to be the big number out this morning. Everybody's focused on that. And again, that's very likely going to have a outsized impact on the market this morning because, again, everybody's just kind of keyed up for this. But the good news is once we get through the CPI report, that's it for the next couple of weeks. No more employment reports till December, no more CPI reports until we get to December. So once we get past this kind of key report, outside of just some Fed speakers over the next couple of weeks, shouldn't have a whole lot of big news, right? We're almost done with earnings. Those have come in about as expected. It wasn't a big disappointment, wasn't a big win. So a lot of the pressure from these news-related events should kind of alleviate as we get into the holidays. And with inmates running the asylum, might see markets move up here a little bit over the course of that time. But again, we just got to get through today, see where markets end up at the end of the day. That's going to kind of really be the next kind of the next deciding point about where we go to next. But there's clear evidence, as I said. The Atlanta Fed currently has GDP pegged for the fourth quarter at nearly 4%. But it's interesting because if you take a look at some of the underlying economic data, 74% of Americans are going to celebrate Thanksgiving because so many people are skipping the holiday this year. You just can't afford it, right? Used vehicle prices have dropped at the fastest pace since 2008. Dollar General assistant manager named Travis Bennett recently posted a video on TikTok that showed unsold inventory literally piling up to the roof. If you can't sell stuff for $1.25 at a dollar store, what is going on? Right? Consumer confidence in housing just hit a record low. Companies are seemingly depressed at low sales numbers. CNN is reporting that Facebook Facebook reported yesterday they're going to lay off 13% of its workforce, about 11,000 employees. 13% of its workforce, 11,000 employees. A leaked video from Mark Zuckerberg addressing his employees says, "Hey, it's my fault, it's my call." So taking responsibility for it. We talked about yesterday the number of tech companies really across the board all now announcing layoffs, hiring freezes, et cetera. So all that leads to slower economic growth. Credit card debt growth is slowing. That's not a healthy sign, by the way. That means that consumers are running out of the ability to tap credit. 20 million U.S. households now behind on paying their power bills. 37% of small business owners not able to pay their rent. What all these signs tell you is that the economy is slowing down, and it's slowing down fairly rapidly. But even though right now, as I said before, look, you had 2.6% growth in GDP in the third quarter. You're going to have north of 3% potentially for the fourth quarter. But that's because all these rate hikes haven't yet caught up with the economy. So that'll occur next year. So we will have slower economic growth next year. We will have lower rates of inflation. The question is when have the markets actually priced all that in? And the answer is we don't know, but we'll find out. So a quick break, come back, wrap up the show. It's the Real Investment Show. I'm your host, Lance Roberts. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
The end of the year is fast approaching. What will the new year bring? Join Richard Rosso, Danny Ratliff, and Lance Roberts for our year-end economic review special event, Tuesday, November 15th. How to address higher taxes in the new year. Should you delay your retirement in 2023? What will the midterm elections mean for markets? Register now at realinvestmentadvice.com for our year-end economic review special event with Ratliff, Rosso, and Roberts. realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Get started right now at the website, realinvestmentadvice.com, or simply call our toll-free number, 855-RIA-PLAN at realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
All right, welcome back to the show this morning. NASDAQ up about 43 points, S&P up about 6, Dow's up about 45 points right now. So again, market's trying to look, a little bit positive at the moment. But again, before we get the market open this morning will be the CPI report. That'll be at 7:30. Well, and again, futures are going to swing wildly in one direction or the other. It's not going to be a meh moment, right? It's going to be, oh my God, or yay, one of the two. And stocks are going to jump in one direction or the other. And again, we're all kind of keyed up to this one point. So again, there's no way to really know that for sure. And this is the problem with trying to, manage money. If you go, look, I think inflation is going to be super hot, and so I'm going to short the market, and, these numbers come in, there's no way to because there's so many manipulations to the data. You don't know how these numbers are going to come in, and it's just a wild guess, and everybody's trying to guess which way it's going to be. And lately there's been good indications that inflation should have cooled a bit more already, but these numbers still come in really hot, and that's because of the lag in some of the data, and that's the hard part to account for, particularly with inflation. So you go short the market betting on a hot number, and this number comes in weaker than expected, and stocks go surging off to the moon. And this is the problem, right? I mean, we're not going to have a day, most likely, anything is possible. But what we've seen with the latest CPI reports is very sharp movements in one direction or the other as these reports come out. So, and again, by the time that, and the markets aren't going to kind of open a little bit and then go down, or open up a little bit and then go up and give you a moment to get into the market or out of the market. Because this report comes out at 7:30, by the time the market opens, there will be a big change one direction or the other. Now, at some point, the market's going to have factored all this stuff in. Right. And again, you would have expected by now that, most of the inflation expectations would have already been factored into the market. A lot of the Fed responses would have been factored in the market. Apparently, that's not the case, because we go through this every month. And we just kind of continue to float from one employment report, one CPI report to the next. But again, we'll see what happens this morning. And then we'll have to make some adjustments. Key support right now is a 20-day moving average. And then we've got some basic kind of lows from the FOMC announcement last week. That's a real minor level of support. And then basically it's to the lows of June is the next level of support. Below that, we're going to be setting new lows for the market. So there is definitely some downside risk. Need to be aware of that. Okay. So you figure out a way to attach an iPad to a bike and then sell it for a couple of $1 billion. And then everybody buys them to go have them turn into coat hangers during the COVID pandemic. And now nobody wants them anymore because, well, they're coat hangers in households and they take up space. So what do you do as the CEO of the company at that point, right? You go start a new business. And I love this. Peloton's former CEO and co-founder, John Foley, who made a series of demand miscalculations for Peloton bikes during the pandemic, he eventually resigned. And this is amidst the cratering of the shares of the company. Well, he's back. He's got a new venture. Now, I just have a question. I've raised money. I've raised a lot of money in my lifetime for different things, right? It's just been the things to do. But, there's always the business of having to go in and pitch people on raising capital. And I just want to know how this story went that he actually convinced somebody to give him $25 million for his new business venture. But this just goes to show you that once, it's just like Sam Bankman-Fried, right? He's $16 billion. He's now a negative net worth. Somebody's going to fund him to start another business, right? He'll walk into a VC firm somewhere and say, hey, that one didn't work out, but I've got a new idea, right? The guy that ran WeWork, right? That was skimming money off the top of WeWork, the whole 9 yards. He went and started a new business, got a bunch of funding for it. Right now, why, look, I just saw you run another business to the ground, but I'm going to fund you again. I don't really get that, right? But that's the way it works. Once you're in the loop, you're in the loop. And so it becomes really easy to raise capital at that point, right? People will take your meeting. If you're Sam Bankman-Fried, people will take your meeting because of it doesn't matter what the outcome was unless you're in jail. They'll fund you again. And so this is the same way with this guy. So here's a guy that built Peloton, ran it to the ground basically, goes out, pitches a company, gets $25 million to start a rug business.
We're not talking toupees, are we?
No, rugs.
Rugs.
Well, you gotta have something. You gotta have a rug to put your Peloton bike on.
Exactly.
So he's now doing the accessories for Peloton bikes, I guess. His new company is called Ernesta. Just announced $25 million in venture capital funding. The company is stacked with ex-Peloton managers. This sounds like a great idea right from the get-go. Let's get a bunch of people who ran a company into the ground. Let's get them all together to start a rug company. Here's part of his pitch. They're going to make custom rugs in 5 colors each. And the quote is, with Peloton, we didn't know it would be a success or not, but I knew working with good people was a valuable way to spend my time. That's a true story. Rugs might seem like a potentially uninteresting category, but there's probably at least one rug in your house, and he's correct about that. They're ubiquitous, and people don't spend a lot of time worrying about them. Custom Market Insights released a report in July that showed more than 100 million rugs are sold in the U.S. yearly. The rug market's expected to expand to about 18 billion to 25 billion by 2030. This is part of the pitch, right? And this is always that pitch, right? There's never a downward trajectory in anything that you're raising money for, right? I'm raising money to go fund a new company to build pet rocks. And here is the funding trajectory for pet rocks, right? That people are just going to buy these things. And that worked for a time back in the pet rock period for about 18 months. And then nobody wanted pet rocks anymore. And I'm not saying people aren't going to buy rugs. People are going to buy rugs. But $25 million for a rug company, you got to sell a bunch of rugs at a pretty decent profit margin to make $25 million worth money. But again, got stuck an iPad on a bike and sold billions of them. So, who knows? I just want to know when somebody's going to put a GPS locator in my rug so I know exactly where it is in my house at all times. I mean,
That's handy if it's a flying carpet.
exactly.
Yeah.
There was a guy for Halloween
Yeah.
that actually did that. He dressed up as
Aladdin.
Aladdin. Thank you.
Yes.
I lost the name. And him and his daughter dressed her up as the princess, and then
Yeah.
he put a rug on top of a skateboard and was rolling down the street. So
That's pretty clever.
yeah, that was very people have very creative ideas for Halloween costumes. So we'll see. Anyway, we'll see how Ernesta does. If you're looking for a rug, Ernesta will be a new company to sell you a rug. You can get a rug in 5 different colors. Put it in your house.
Did he pitch this as a ground floor opportunity?
I don't know, but he's probably going to pull the rug out from somebody on this. So we'll see how it works out.
I'm floored.
So anyway, all right, get ready to wrap up the show this morning. Puns aside, again, as kind of paying attention to, we're wrapping up earnings season. We've got a few earnings out today: AstraZeneca, Brookfield Asset Management, Dillard's, LegalZoom, Ralph Lauren, Tapestry reported. Tapestry reported this morning. Terrible outlook. Stock's going to be down sharply. WeWork, speaking of the devil. They missed on revenue, earnings, and outlook. That stock's down about another 10% this morning. But again, here's a company that was a disaster to start with, but people funded this whole idea of rental office space. And there's a company called Regency that does it, and that does it very successfully. And they were giving astronomical valuations to WeWork, like they were going to reshape the industry. And of course, that didn't work out at all because people just rent an office. It's pretty basic. Not a whole lot of science and math to renting an office space. But again, this is where Wall Street kind of always runs awry of itself. $25 million for rugs. Hey, you never know. Might work out. But anyway, wrapping up earnings season, most of those, the big names are in. Earnings came in pretty much as expected. Sales growth was a little bit weaker than expected, but earnings were pretty much in line across the board. The question is going to be really what happens next year in the next couple of quarters of earnings as these higher interest rates start to impact consumer spending. That's going to be the things we really want to watch. And the question is, have valuations adjusted for what interest rates and higher interest rates are going to do to economic growth? And that's the one question we really don't know the answer to. But 7:30 this morning, CPI, we'll talk about that on Monday when we come back for the next show. Of course, Danny Ratliff and Richard Russo here tomorrow, talking to you about all your financial planning needs. And also make sure that you're registered for the upcoming event. November the 15th that's next week. We've got our year-end economic review. I'll be joining Richard and Danny to talk about the outlook, how midterm election cycles, work for markets, what that means economically as we talk about next year, kind of what the economic environment looks like, the investing environment, and where to put your money. We'll talk about that on November the 15th. Make sure you're registered. And in the meantime, get by the website, realinvestmentadvice.com. Make sure you're registered for our daily commentary. Right there on the front page, you can subscribe to our daily commentary and our weekly newsletter. So make sure you're on both those lists so you don't miss out on any of the information. We give you a market update every single day to tell you what the market's doing and support, resistance, those type of things, and interesting other tidbits. It's all there at the website, realinvestmentadvice.com. See you back here tomorrow.